When you take a look at these sort of rolling lockdowns that happen, the latest, of course, being in Haidi, does that give you any confidence that we'll see a path out of COVID-0 after the Party Congress?
Well, at least if we look at the Golden Week, the market does not have high expectations in the first place. The Ministry of Transportation, for example, predicted before the holidays that the road passenger traffic could drop by as much as 30% compared to the same period of last year. And the local travel appears to replace the long-distance travel as the interprovincial restrictions remain quite high. And as you mentioned, I think the recent rebound in the COVID cases to above 1,000 nationwide, and also the further tightening of the COVID measures by the local government that may have frustrated tourists. For example, tourists to Hainan, to Xinjiang, to Inner Mongolia. So I think the low expectation is hard to beat. After the Party Congress, there could be some marginal easing of the COVID measures. At least those excessive measures is likely to be eased. For example, I think the local government in Inner Mongolia put it very vividly. They want to to contain the COVID spread. They will not hesitate to kill the chicken using the slaughter machine for the cow. So that is, I think, what is happening now. After the Party Congress, I think preparations may start for eventual exit from the COVID. But the meaningful changes, in our view, will only take place perhaps next spring.
By next spring, right. So from now until then, do you really expect that there will be further pain when it comes to the growth pulse, and therefore authorities, the PBOC, will have to do more, both for monetary and fiscal?
I think both monetary and fiscal, they are already doing a lot in terms of policy support. But if I think the stringent COVID control measures still stay in place, if I think the property market continue to be corrected, that is going to continue to make the recovery quite moderate. Currently, we forecast, for example, the third quarter GDP growth at 3.2% year-on-year, fourth quarter growth 4.8% year-on-year. They are better than the second quarter, of course, which suffered from the Shanghai lockdown, the 0.4% year-on-year. But on an annual basis, China's GDP growth, we forecast 3.3% for this year, still much lower than the target of 5.5%. Interestingly, the market, even though perhaps may be disappointed by the retail sales data coming out of the Golden Week, they may be interested in the home sales data during the week, given quite a few policy support introduced right before the holidays.
Shuang, how is that filtering through in the currency? We have seen some support for the offshore yuan while the onshore markets have been closed during Golden Week. This chart on the Bloomberg, though, shows us that, of course, we have seen a stronger bias towards a fixing every time when markets were trading. How does this factor into the broader global economic picture, into the broader Chinese economic picture?
The recent movement of the renminbi is more of a function of the US dollar value. So over the past week, the market sentiment improved a bit and the US dollar softened. So the renminbi recovered a little bit against the US dollar, with the US dollar CNH falling below 7.1. But on a trade weight basis, renminbi remains quite stable against the basket of currencies. So going forward, I would say that the renminbi, the fundamental, will continue to drive the renminbi, right, including the growth momentum we just mentioned, but also the trade surplus. Trade may remain in surplus, even though it may shrink from the record high in the first half.
Shuang, 20 seconds. Inflation or disinflation in China, the CPI outlook, please.
Inflation may have risen to 2.8% year-on-year from 2.5% in August, but we don't think inflation poses a constraint for the PBOC. Instead, the PBOC may pay more attention to the U.S. inflation, the U.S. jobless claim, the non-farm payroll, and the spillover from the hawkish Fed stance.